Hello, dividend executives. Welcome back. Well, we have done it. Another month has come by. We are now in month 8, which is crazy to think about in the high yield investing with margin journey on Robinhood. We have been at it. We have been buying assets. We have been slowly monitoring this and looking at how much we're paying in margin, how much those assets are paying us in dividends, and was it worth it? So let's take a dive into it. Let's look at the numbers. Let's look at the margin portfolio. Let's look at how much we paid in month 8, and let's really break it down. So going to jump into Robinhood here, of course, and I want to take a look at the margin interest payment. So as you guys know, we've gone through this entire series. December, 36 bucks, January, $37 in interest paid, February, 44, March, 55, and then this month we have paid $78.49. You must ask, why is it up so much from last month? Well, it's because our average margin used. We ended up increasing our margin. The prices have been falling like crazy, and so I have continued to purchase, and in doing so, we have continued to increase our margin interest. So this billing cycle is March 8th to April 7th, and the interest rate on this one was 5.75, so another quote-unquote pause on the rates. We paid the exact same rate that we paid last month. We'll go over that, but we paid $78.49. So we're going to jump into the nitty-gritty. Of course, this is on QDTE, XDTE, and RDTE. If you guys are new to this series, those are the assets. What we did is we ended up using margin. We bought a bunch of shares of those. We prorated it to how much we paid in margin, and then we saw how the numbers look. So this is a dividend account. It's really come down a lot. You guys have probably seen the market pull back with all the nonsense that's been going around. And we're down to about $31,000 in the account. We're still up about 5, almost 6% for the year. But at one point, yeah, we were up 40% just on February 19th before all the tariff stuff started happening. So hopefully we get back to that point. I'm just going to continue to buy like I do. This is a long horizon for me. You guys know that I've been building this account, and I'm going to continue building this account until it pays me around $5,000 a month. And then I'll probably start putting capital elsewhere. I don't know. We'll see how it is when we get there. But the whole point of this portfolio is to someday pay my mortgage payment or pay me a similar payment to that. So buying power, 27,288. Why that's important? Well, that's how we know our risk status, right? So right now our margin status, we have about $19,612 worth of margin used. Right now we have $27,288 worth of buying power available, and we have a 50% margin status. So that means that my account could fall down another $15,000 before I would get quote unquote margin called. So we have a lot of room to move there, and that's good. So I could sell puts on that money, and I have done that. Recently, I've not been selling a lot of puts. Puts are really good in a bullish market because as the assets go up, they tend to expire worthless, and then we get to keep all of that premium. But as of late, a lot of puts have been getting assigned. You guys saw on Connell, we ended up getting assigned 200 shares there. Of course, we sold puts on it for a long time before we did get assigned. But still, that's the environment in right now. So I'm just kind of laying off the puts, and we're just continuing to sell calls at our cost basis, or I guess above our cost basis. And then we take that money, we put it into dividend stocks. So this is where we're sitting here. Annual rate, 5.75, and we are paying $2.96 right now. If I went up to $50,000 worth of margin, we're at 5.55%. And then, of course, I get my first $1,000 free in interest with Robinhood Gold, which I do have on this portfolio. So that is nice, the free $1,000 there out of part of our margin. So that's where we're sitting on this portfolio. Again, the assets I have those invested in are QDTE, XDTE, and RDTE. We have about $8,200 worth of XDTE right now. QDTE about $7,200, RDTE about $6,200, and I'll just tell you, RDTE has been the worst performing one so far. I really thought that interest rates were going to come down more than they have so far, and I think we're going to get more cuts this year. Some are saying 2, some are saying 3. It really just depends on how the market ends up going, and we'll really see. So a lot of people are saying we're not going to get a cut in May. A lot of people are saying, I think, what was it, like 75? Yeah, it was like 75, 76% are saying that we're going to get a cut in June. So we'll look for a cut there. And then they're pretty much guaranteeing, not guaranteeing, but the street thinks on the CME Fed Watch tool that there's only a 5% chance we don't have at least one cut by the time we get to July. So people are seeing, the street is seeing rate cuts, and yeah, I think they're going to be coming. But let's go over the month. So let's jump over the data. This is all the data so far. You guys can see the date range here. Month 7 was last month. We paid about $55.10 in margin interest. And then month 8, we're right back to where we were back in month 2 and 3, right? So we used to have a lot of margin. We ended up paying a bunch of that margin off. And then we've slowly started accumulated it back up. You guys have seen since we started this series, the interest rate has gone from 6.75 all the way down to 5.75. And I think that's going to slide even more. I wouldn't be surprised if we were down at 5 or below 5 at the end of 2025, which means that our payments we make every single month on the interest is going to go down, right? So month 8, we paid $78.49 in interest. Total dividends between QDTE, RDTE, and XDTE, we received $655.86. Our prorated dividends, and all that is we have, between those 3 funds right now, I have about $21,000 or so at capital on my cost basis at stake. And with obviously the margin used of $16,381, we prorated that to about 77%. And that's where we get the $507. So really out of the money we have on margin, about $507 of it is applicable to this. And that is where we got our interest rate, right? And so if you take the total, the 507, subtracted by the margin interest rate of the 78.49, then we're looking at that $429.08, which you can see right here on this cell right here. So $429 in the green. Not bad. I'll take it. This is a really good month. Obviously, we use more margin, but at the end of the day, you know, if I pay $78 and in return I get a $429, that's not a bad investment. Now, there's obviously the side of it where you can look and say, well, the market went down, so you lost some money on paper. Well, just remember, you don't lose money until you actually sell the stock. Just like the stock market has gone down in the last couple of months, it has the same ability to just go right back up, right? So if we look at QDT, for example, over the past week, we're flat. Over the last month, we're down 12%. Year to date, we're down 21%, right? So this asset is not doing good. It came, at a high this year, it was up at $41. And we're obviously down on paper with QDT, but on the flip side, if we're going to come in here and we take a look at QQQ, which is the NASDAQ 100, and we look at the year-to-date on that, it's down 10%, right? So this asset is performing worse than QQQ, of course, but on the flip side, it's also paying you a weekly dividend. So you have to factor that in as well when you look at the total dividends. Of course, you can do that on something like Seeking Alpha if you want to go that way. But yeah, when the overall market is coming down, you're obviously going to see these option funds go down as well. If we look the year-to-date on SPY, down 8%. Just a few days ago, we were down 15% on SPY, right? April 8th, yeah, we were down 15.76%, and the SPY had dropped $92, almost $93. So that's the market we're in. When those pull back, obviously these assets are going to pull back. So let's look at the picture anyways, though, because it is interesting to see. And how are we looking? So QDT, we are, 37 weeks into owning this. You can see the 8 on the left. That is this last margin period that we just went through. And you can see all the dividends, all the shares we dripped. Just in this period alone, we dripped, 6.5 shares on drip. And I'm going to get that up to 250 shares, and then we'll turn drip off. On a side note, we just recently hit 500 shares on YMAX with this latest drip. We were at 496. We just dripped 4.971. And so we ended up hitting 500 this morning. I sold off just a little bit over a share so that it's right at the $500 mark. I turned drip off, and now we're going to use that capital to start paying down the margin. So that'll be nice. That's just on a side note. But yeah, so this is the total return. So QDTE, total return is minus 1.96%. So in 37 weeks of ownership, we've actually lost money. But the market's pulled back significantly. There was a long time that we were up 9-10%. I would say multiple weeks. If you went back on this series and you looked at all the videos, most of the time we were up. So it's just the ebbs and the flows of the market, and that's where we're at right now. That's what the data is showing. So we're down about $178 total return on QDT. Without the dividends, it would look definitely much worse. XDT, similar picture, right? So we're 37 weeks into this. We're down $206 on paper, and we're down about 2%. So not great, not bad, but that's the data. We're up to 200 shares. Same thing here. When we get to 250, we'll turn drip off, and we'll start paying ourselves back. that's when I think we'll get to a healthy portion, right? You can see these ones are paying, anywhere between, I don't know, if we just grab this chunk of data right here, average is $50.76. So each one of these, if I can get each one of these to pay me $50 a week, that's $150 between the three on average. If I can get $150 between these and then YMAX 50 as well, that's $200 between my favorite assets to own on the weekly payers. And that's, $200 worth of passive income a week. So that's what we're looking at doing. So that is XDT. Let's jump over to RDT. Similar picture here, less weeks. 27, 29. So we're 29 weeks into this one, and this one is getting absolutely crunched. IWM, which is looking at the Russell 2000, has been absolutely hammered. It's down, to levels that we saw a long time ago. So that's IWM. And we've dripped ourselves 29 shares. We've collected $1,170 worth of dividends so far, but we're down $903. So not good. That's about minus 11% on our return there. So that's where the data is. When we look at the data of how we're trending, QDTE is trending down when it comes to the weekly dividends. XDT is trending up, which is good to see, and RDT is trending down, which is not a shocker there. We thought RDT would collect much more premium. It has not done great as of late, and that's the data. So that's where we're sitting. If we want to just look, let me just jump into this. If we want to just look quickly at the total dividends for these ones, QDT at $1,739, YMAX at $1,417, RDT at $1,170, and then where's my XDT? It's probably, oh, there it is, $1,481. So all of them are in the four-figure number, which is nice to see. They're just continuing to build. We'll get them all to 250 shares, and then we'll turn off drip, and we'll start investing into something else, and we'll set it and forget it. So that's the update for this month. Not too bad. Cool to see the numbers. I'll take it. Still 429 in the green. Obviously, we increased our margin significantly over the last couple of months. With all of the market dropping, I've just been buying, and then soon we will start turning drip off on a bunch of things, and we will start paying down the margin so that we can get it to a more sustainable level. And then, of course, I continue to add cash each and every single week to help with the margin as well and help with the growth of the portfolio. Minimum of $100 fresh cash. I think I did $3,000 or $4,000 last month in new cash. So we'll just continue to add. We'll buy the dip, and long term it'll pay off. So hope everybody is enjoying their assets. Hope that your funds are doing a little bit better maybe than these ones, and you at least appreciate the data that we're showing here in my journey of using margin to invest in high yield dividend stocks. So full transparency. Appreciate everybody as always. Don't forget to drop a like and a comment, and appreciate it as always. Happy investing. We'll catch you next time.